and welcome to Bloomberg Quint, the top headlines of this hour. Monday blues in the last street as markets slip into the consolidation mode, with the Sensex halting its two-month winning streak. And Larsen & Toubro wins orders worth more than 3,500 crores across four verticals, including transport, infrastructure, metallurgy, power and building construction business. And the Adani Group shares fall as Labour government is favoured to return in power in the northeast Australian state. And oil marketing companies like BPCL and HPCL have taken a backseat, slipping over rising crude oil prices. Those are the top headlines. I am Agam Vakil. Up next is Hot Money with Darshan Mehta.
Thank you, Agam. Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our experts on the show: Ashish Chaturmohta of Sanctum Wealth, Kalra of Target Investing, and Dinesh Rohira of Finance.com. All of them join us on the show. Thank you, all of you, for joining us on the show. Today on Hot Money, we will discuss stocks like Putone Projects, UPL, Balaji Telefilms, Aptech, and TV18 Broadcasting. Let's start with the first one, and that is Putone Project, a Bangalore-based real estate company which focuses significantly on affordable housing. Stock is up almost 65% from the November lows, and is up almost 250% from the start of the year. So significant amount of traction that's seen. What should one do? Is the rally over, or is there more traction that is there for Putone? We'll ask our guest. Dinesh, I'll start with you. What would you make of Putone rally, and do you think there is more traction here?
So there's more traction out here. The real estate sector is just starting up. And if I look at Putone, while the results were not exciting in the last quarter, but they have had decent amount of sales volumes that has been happening in the last quarter. It's up 74% year on year. And apart from that, they are well positioned in the affordable housing sector. They are starting up with 15 new projects over the next 12 to 15 months, about 15 million odd square feet being developed over the next 3 to 5 years horizon. And the affordable housing segment works well for them, right? So from that context, in terms of valuations, they are reasonably lower compared to the overall industry benchmark. From that context, I would say it's a thumbs up for Putone.
Okay, but it's up almost more than 250% on a YTD basis. Yeah, valuations at almost 30 times this year.
Right.
That's right. Fine. That's a fair valuation.
But I guess this sector is just about starting up, and the infrastructure status as well as the focus on affordable housing is going to go up. I guess the interest submission and all that stuff would help better in terms of the offtake. So from that context, they are positioned well. I mean, if you look at the overall down cycle that has happened in the real estate over the last 3 to 4 years, compared to the upside that has happened, I guess there is still some more room left in the sector. And Putone will have a
and you share a positive view on the entire real estate space on that front, or will
largely on people who are adequately leveraged on their balance sheet, right? There are some players who have not had cleaned up their balance sheet so far, so they would obviously tend to suffer. But otherwise, most of the players are coming up.
Okay, Ashish, what's your view? Dinesh is bullish on Putone. Would you share that view, or you have a contrarian view?
No, Darshan, we are also quite positive. In fact, in our last discussion, we had mentioned about organized real estate players will be doing extremely well, and within that, Prestige, Godrej Properties, Mahindra, Life. These are the companies which are doing structurally quite well. And Putone, and obviously, Putone is now focusing more on affordable housing. Now the new projects, almost 2/3 of the new projects will be in the affordable housing segment. We expect company to generate almost 9,000 crores of cash flows in next 4 to 5 years. So that will be a very positive for this company. And if you look at the market cap, it is around 3,300 crores. So I think going forward, we are going to see a strong positive trajectory in the stock. And we believe that in short to medium term, one can expect 20-25% kind of returns even from current levels.
Okay, so that's a 2 thumbs up that's coming in. Samir, would you manage a thumbs up, or would you have a negative view on Putone?
Actually, I have a bearish view as compared to other panelists because of 2 reasons. One is the history. If you go and see the quarterlies on a larger scale, the performance has been very volatile. So one quarter will give you a 70% or 80% YOY change, but then it just stabilizes and comes down. So that second, the debt on the books is high. And the only point is now they have announced, like last week, they've announced an aggressive plan to expand into affordable housing in a very big way. So earlier, the cash flow generation already is low. And if you see the results, if they have a profit before tax of 33 crores, 23 crores is the other income, which is mainly due to the accounting changes. It's not something which you are earning an interest on. These are mainly accounting changes which result in other income. So last 4-5 quarters has been the same story. So the profit which is coming 80% or 70% is coming from the other income. And 60 crore is a stabilized interest. So I don't know where this cash flow generation automatically will come from, especially in the affordable housing where the pricing pressure is there and your costs just keep on rising, but you can't increase the prices of the units as quickly as possible. So I feel a very negative vibe coming from.
Okay, so I take your second point, but the first point is because you're dealing with a sector like real estate, which is typically lumpy. So revenues will tend to
see that.
You can't look at it on a.
See, it's not something you look on quarter to quarter. That's why I'm saying if you divide the 4-5 years into quarters. See, I'm not saying that you divide last 3 quarters and see it. I'm talking about last 4 years quarters. If you divide, the unevenness is too high. It's not. Even if you take a DLF or Oberoi or anyone else, the quarterly thing will be divided and you'll still see some kind of a growth going upwards. Out here, it's either getting stabilized or going down on the quarterly basis.
Okay.
So I'm seeing on the 12 or 13 quarters kind of a trend, not a 2 to 3 quarters, where I understand that real estate is more of project-based sales. So when the project gets booked, they show the sales. That I understand. But otherwise also it's very uneven and I'm very scared of the other income which is supporting the profit.
Dinesh, you want to answer? This seems to be a valid concern what he is putting. Why is it that, it's...
Yeah, but if I look at the recent quarters in terms of while the results that he mentioned, I understand it will be cyclical, but the sales volumes have increased.
Okay.
Right. So that gives reasonable amount of bottom line protection towards the overall
but
piece.
That's where I'm coming from. Like if 60 crores is going to the interest, after that the profit before tax is 33 crores. Out of that other income is 23. So I'm very scared of, and that also, see, other income, if it's stabilized income from interest, I understand. I can give that kind of comfort that, this will be something which will go on for years. But to give me a valuation on something which is accounting issues, which I feel very scared of as an investor. I'm not that comfortable. I rather go in the same sector somewhere else which has more consistency in the numbers.
Okay. So that's the view that's coming in on Puravankara at this point of time. Two bullish views that are coming in. Dinesh believes that there is more traction. It's the start of the real estate cycle, and despite Puravankara being up 250%, I'm sorry, he believes that there is more potential. Ashish also agrees that there is potential. But we have a contrarian view that's coming in from Samir, mainly on 2 factors. First of all, the results that have been there, and basically the debt on the book. So that's something that he has a concern on. So it's a 2:1 as far as Puravankara is concerned. The next stock that we'll talk about is the counter, which is UPL. It's up almost 2%, has been gaining steadily ever since the Nifty inclusion. The management is seeing that, they recently had a call with a lot of analysts. They're seeing a 12% CAGR over the next few years with margin improvement. If you're looking at the ROC in excess of 15%, trades at almost 18 times this year and 15 times next year. What should someone do with a counter like UPL? Is there more traction? Is there margin of safety for UPL? Ashish, I'll start with you.
So we are quite positive. So if you look at recently, the stock has seen some correction, and that's a good opportunity to re-enter the long positions. Now, if you look at, this is one stock which is the second largest generic agrochemical player. And if you look at the management commentary, in next 3 to 5 years, we are expecting 12 to 15% revenue growth, and EBITDA margin, which is around 18% odd levels, is expected to increase to 23-24%. Brazil is the fastest growing market for them, and I think with widening distribution reach, they are going to do a good amount of business. Apart from that, if you look at North America, they are tapping the cereal crop protection market, which is a huge market and where they have an insignificant presence as of now. So keeping all that in mind, I think we are going to see good amount of uptake in terms of numbers from these levels. And I think reasonably the stock, which has hit all-time high around 900 odd levels, we expect the stock to cross that level in next 3 to 4 months.
Even on the technical charts?
Yeah, it looks quite promising. Yeah, so after decent correction, I think it offers a good entry point at this point.
Okay, what about you, Samir? Any view on
I'm neutral on UPL. Positive on the sense that they showed a 11% volume growth, which is good. But on the negative side, if I see in US business, they face a lot of pricing pressure because the crops they help support on were bumper crops this year. So the pricing any which way had to be cut so that the volumes get supported. On the Indian business, they have done nicely, but the only point is, again, after the merger and all, their books are so heavy debted. The only point is, until unless the pricing power comes back or they are able to increase the pricing, I don't see any upside or that kind of hurry to enter this stock.
Do you see the pricing pressure coming back?
Not right now, because at least for next 2 seasons, US shows a lot of bumper crop coming out in corn and soya, which they support mainly.
And what about valuations? Are they fair or
valuations are fair again because see, the business is good. The company is doing well operationally, but financially, when you take that burden, people don't like. I think investors are only getting worried of the pricing pressures that it won't ease off soon enough. So that's why even your valuations remain more low. But I think the debt and the servicing of the debt, I would be more interested in looking at that right now.
Okay, what about you, Dinesh? A neutral to slightly bullish view, a very bullish view?
So a bullish view on UPL. The financial performance have been quite great in the last quarter, right? On all the parameters, whether it's revenues or EBITDA or margins, etc. and all, they've done well. Their tie-up with Bayer for joint marketing of ASR fungicides in Brazil is quite positive. Bayer is a leading player in Brazilian market, so it will enable them to have a reasonable amount of market share out there. The company is expected to grow over 12 to 15% over the next 3 to 5 years horizon with improvements in margins, as rightly pointed out by Ashish, to about 23 to 24%. And if I look at valuations, they are reasonable compared to that. Right. So from that context, it works out well. From an overall standpoint for 3 to 5 years horizon.
Is UPL the only large cap? Is there any other peer that you would compare with UPL, or it's on it is a standalone on its own?
I guess
in terms of
would,
the business it does.
I guess I would look at it on a standalone basis in the space at which it operates.
No direct peer competitor as such.
Not really. I mean, there are silo competitions in different segments, but overall, as a single play, UPL stands up.
Okay, so that's the view that's coming in on UPL at this point of time. Two extremely bullish views coming in on UPL from Ashish as well as Dinesh. Slightly skeptical, but still a slightly positive view that's coming in from Samir on UPL. So that's the general consensus that we're getting. The next counter that we'll talk about is a counter that's buzzing in trade. It's up almost 20% in November. A majority owned by Reliance Industries. Reliance recently bought almost 24% stake in the company. So on a 12-month basis, the counter has actually doubled. What's the traction? Return ratios are low, PE of almost 40 times on this year basis. But will Alt Balaji create value? What are the new triggers for Balaji Telefilms going ahead? Samir, I'll start with you. What do you make of Balaji Tele? Is there value creation that is left?
So I'm bearish on the stock just because, you know, they're using the cash cow segment, which is the TV segment for them, and they're deploying all the cash into the Alt Balaji. So they've invested till June end, they had invested around 100 crores and the loss was around 31-32 crores. So that, and generating a revenue of 2 crores, which was, see, as a business, it's very competitive. You have Amazon, you have Netflix, now Facebook is coming up with content generation. So that kind of fight which you're doing, especially domestically, and you're asking people to pay up, that I find a very different story to be not profitable anytime soon. So the cash, whatever the company is generating on a standalone basis, will go to Alt Balaji. So I think there'll be more money required from Reliance or anyone else to be raised for this business to keep on deploying for next even 2 years or 3 years.
No, but people do pay for Amazon, people do pay for Netflix.
See, that's what I'm
probably
saying.
Alt Balaji is at the time where Netflix
so
was
what
2 years
happened
ago.
with them is that 2 crore revenue came out of people mostly taking 3-month plus kind of subscription. So I'm not saying there are not people paying for it, but it's just that the amount you're putting into content generate, you're not getting even back even 10% of it right now. So it's a story which I rather see and let it play. So I rather bet on Amazon getting that kind of a payment because the payment plans out here are very different from each other.
Okay, but so your basic concern is alt Balaji, not the core business.
Yeah, because core business is cash generating for them. So I'm not worried about that. But how much that cash gets into alt Balaji and they burn the over consolidated books, I'm worried on that.
Okay, and valuations expensive or fair?
Yeah, valuations are expensive because you started burning a lot of cash, which I, as an investor, give a lot of value to. So that's where that debt-free status and all those kind of dynamics start changing on a quarterly basis.
Okay, Dinesh, valid concerns what Samir has pointed out, or you would have
so I guess I'm quite positive, and for the same very reasons.
Okay.
So what Samir is negative about, I'm quite positive about that.
Okay.
India is just about seeing the start of all these streaming businesses, right? I mean, Bloomberg is a classic example, and I'm sure you remember about a month back in the same
Bloomberg
show.
Is free actually at this point.
No, about a month back in the same show, we discussed about Balaji. Coincidentally, I happened to discuss at that point in time. It was around 150 odd levels. Today, it's about 165, 170 odd levels. So it has risen up in the last 1 month. And I guess primarily the same reasons, for being futuristic, you've got to be investing into new age businesses. If they remain to be stagnant in the existing business models, their revenue streams would go down, right? And it's the age of millennials. They would use the handheld device to look at all these programming channels. Right, so from that context, and coupled with the Reliance coming in, with the subscriber base that Reliance Jio would bring in, bundling, let's say tomorrow, bundling all Balaji on Reliance live phones, etc. and all stuff, there is significant potential, untapped potential that would exist. And at a market cap of 1700 odd crores, entering into a segment which could scale up for the next 5 to 10 years, I guess Balaji is placed very well out there.
Yeah, but Samir, that's the point. Yeah, so Reliance is, we'd have thought something before because it's been a success story with Jio and it looks for content. And that is why it has stakes in,
I'm not denying any point which he's made, but the only point is being a conservative investor, I rather look at companies which are there for. Because see, it won't become profitable in the next 2-3 years. It's a long-term story. I rather enter at maybe where people throw it out. Because see, it's about the weight. When that weight will, it's like a DTH business. When digital, that digitization of the set-top boxes came into play, everyone was very optimistic about a Den or a Hathway and all paying off in next. But it was a model which is a capex model. Out here also it's a capex model because the content which gets generated is being generated at such a high cost that your revenue or that even the subscription base cannot justify that cost, right?
Do you think alt Balaji will become profitable soon, or is that on that front is there a concern?
Yeah, I guess alt Balaji, it's targeting a revenues about 60 to 70 crores out over the next 3 years horizon with 4 million odd subscribers. I would say if Reliance plays well, it could very well catch up in about a year and a half time frame, whatever targets they have looked at in terms of the subscriber base. In terms of profitability, it may take about 3+ years horizon, but then you're investing into a business which is going to grow at 25% plus rate over the next 5 years horizon, right? That is where the stuff is. If you would end up investing into the business when it starts becoming profitable, it may be at a much higher valuations at that point in time, right? Okay. So it may be the right point in time to invest at a nascent stage right now. Because with alt Balaji's, with Balaji's content leadership, alt Balaji getting traction in the marketplace, Reliance putting in money, Reliance bringing in consumer base, etc. I guess there is no other player in that space to take leadership vis-a-vis, let's say, an Amazon or somebody like that. And there are
many players even domestically coming up, so you can't discount Colors in that or a TV18 in that. So it's how about you play around it. My only point is if Balaji would have taken that same stuff and generated and put it on content to start with and get the subscription based, then I would have been fine with it.
Okay, but Ashish, what's your view? I think you were left out here. So a very positive view coming in from Dinesh, a negative view that's coming in from Samir. So which side of the spectrum are you?
So see, definitely not very bullish at this point of time, but one thing is clear that Reliance investment is going to provide a lot of support, and if you look at the synergy, it's going to be there. So with Reliance, Jio subscribers estimated at 123 million, I think it's going to be a trigger point for Balaji, and since Balaji has invested almost 400 million in alt Balaji and expected to put some 1.5 billion over a period of time, I think now it will entirely depend upon the content. if content is right, then I think it can be a good positive trigger. So at this point of time, technically also I think it's going to be sideways. We are not going to see a very strong uptick at this point of time, but definitely on downside also stock looks very well protected.
Okay, so that's the view that's coming in on Balaji Telefilms. Again, different views that are coming in. Dinesh is extremely bullish on Balaji Telefilms. Samir does not share the same bullish view, and Ashish is rather neutral to bullish on the entire space. So before we move on, here's a quick recap of all the guest views on the stocks that we've covered till now. Okay, the next stock that we'll talk about is Aptech. It's buzzing significantly on a year-to-date basis. The counter is up almost 125%. The biggest of the biggest HNI shareholders hold this counter, be it Rakesh Jhunjhunwala, who in fact owns this company now, largest shareholder. There's Radhakishan Damani, there's Ashish Kacholia, there's Alchemy. So the move has actually come in because of the big shareholders, but can it sustain? Is the business making money for such kind of valuations? It's almost at 42 times this year's earnings. So is the core business something that that is driving revenues for Aptech? I'll start with you, Ashish. Any view on Aptech?
No, I don't have any view. We are not tracking this story.
Okay, what about you, Dinesh? Any view on Aptech?
So I am neutral. I don't have much views in terms of the business taking forward that greatly. Primarily, as you rightly said, the stock performance has been based on the marquee investors that are behind this stock. But if I look at the business performance, even the recent results, right, as there has been a large other income that has been there in those results, right? So the business traction growth has not been as expected. Yes, the sector is good, right? From that context, India is going to be by 2020 the second largest play for graduates, right, as well as for e-learning, and which goes well with Aptech's business model. But the sales execution capabilities have always been in question in terms of their growth. So from that context, unless until they capitalize on that, it would be a difficult task at these valuations. Apart from that, while their domestic business has been doing well, international business has been slowing down. Okay. So that's an area of concern.
Okay, what about you, Samir? Any view on Aptech?
I don't share any.
Okay, so that's the view that's coming in on Aptech, a pretty much neutral view that's coming in. Two guests don't cover it, but Dinesh has a rather neutral view on the counter. And finally, the last stock of the day, and that is another counter which is even buzzing today. TV18 Broadcast was up 10%. On Friday, it's up another 7%. It's up more than 25% from the recent lows. What's the key trigger for the counter? And just before we start, it's a clear disclosure that Bloomberg Quint operates in one of the same businesses that TV18 Broadcast does. So TV18 Broadcast has CNBC TV18, which is a direct competitor for Bloomberg Quint. But nevertheless, it's a stock that's listed, so we have to discuss. I'll start with you, Dinesh. Any view on TV18?
So while the valuations are reasonably high in this space, but they are the leading players, and we are bullish on this counter. The Reliance story can play out on TV18 as well, which we discussed in Balaji. While it is dispersely spread in different segments. Recently, the results showed some profit after a very long period of time. Right? So that's been positive around it. Viacom 18, their JV in the entertainment segment has been doing reasonably well, expected to do double-digit growth over the next 3 to 5 years horizon. They had a good performance with Toilet Ek Prem Katha in the last half, and now Padmavati is expected to do well. So from that context, on the entertainment side, they are supposed to be doing well. And while they are getting into more regional plays out there, so 2018 being a year of elections and all those sorts, they can see some reasonable uptick around that area.
Okay. What about you, Ashish? Bullish stance coming in from Dinesh. Would you share the same bullish stance?
So we are positive on the entire media and entertainment space, and let it be TV18 or ZTV, both as a structural play looks quite promising. We expect advertisement revenue to see a double-digit growth for the industry, and we believe that the news segment of TV18 is going to see a secular uptrend, and with Viacom 18 it should accelerate its growth over a period of next 4-5 years. But definitely the numbers are not getting reflected as of now in the balance sheet, but structurally we believe that it's a trend which is going to see a strong uptick, and even Z Entertainment as a stock I think can deliver very good returns from current levels. And if you look at TV18, technically it has today it's up 8-9%. It's a breakout after consolidating for 2-3 years with a very huge volume as well as delivery volumes picking up. So that signals me something that some fresh allocation is happening in the entire space. So we expect another 30 to 40% upside in TV18 from current
Okay, so
levels.
that's two bullish views. Samir, finally your final word on TV18.
I'm a little bearish on it
Okay.
because of two reasons. See, their flagship channels were, as you mentioned, CNBC and CNN, right? Now the only story over there is what kind of dominance they had 5 to 6 years back. They lost because there's a lot of competition which comes. They might be still ahead of the game, but the only point is, it's for a channel, it's always about how much can you sell that 10 seconds of ad at a price. So what monopoly they had at a certain time, that has gone with the time.
Sure.
Right? There are more viewership on other channels, and it's more of a divided audience now, right? So the pricing has come down in the total number. That's why the profitability was not showing in the system, because your two main channels were facing a good kind of competition, and those have pricing pressures on the ad slots. Now the only point is, has they covered? I don't know. I rather see 2-3 quarters and see if those pricing pressures have covered out of it. Second of all, the only point is they are doing too many things at same time. So there's a lot of cash being deployed in the system. I understand Reliance being the backer of the firm, so he'll keep on pushing the cash whenever needed. But the only thing is, me as an investor, I rather see at a company which generates cash and gives it back to me in some way or the other, rather than, or uses the business which generates more of ROEs and ROCE, rather than being a loss making for so many quarters, and all of a sudden one quarter doesn't change the situation.
Okay, so that's the view that's coming in on TV18. Again, two bullish views that are coming in from Dinesh as well as Ashish, but a bearish view that's coming in from Samir on the counter. Before we wrap up on the show, here's a quick recap of all the guest views and the stocks that we've covered till now. Okay, Ashish, Samir and Dinesh, thank you so much for joining us on the show. With that, it's a wrap on today's Hot Money. Ask BQ comes up next. Stay tuned to Bloomberg.